Hi guys, I hope so you all are fine. Welcome to my YouTube channel. In this video we will discuss about why you should never short a stock. So come to my Google screen and see here why should why you should never short a stock. If you are ever lost money on a stock, you are probably wonder if there are a way to make money when stock fall. There is, and it's called short selling. Ever though it seems to be the perfect strategy for capitalizing and disliking stock price. It comes whenever more risk than buying stock the traditional way. Key takeaway: shorting stock is a way to profit from falling stock price. A fundamental problem with short selling is the potential for unlimited loss. Shorting is typically done using margin, and these margin loans come with interest charge which you have pay for as long as the portion is placed. With shorting, no matter how bad company prospect may be, there are many events that could cause a sudden fortune. How shorting works? The motivation behind short selling short is that the investors make money when the stock price fall in values. This is opposite that the normal process in which investor buy a stock with the idea that it will rise in price and be sold at the profit. And other distinguished features for short selling is that the seller is selling a stock that they do not own. This is they selling a stock before they buy it. To do that, they must borrow the stock that they are selling from the investment brokers. When they do, they sell the stock and wait until it hopefully fall in price. At that time, they can purchase the stock for delivery, then close out the short position at the profit. You may be wondering what happens if the stock price rise, and that an important question. The seller can be hold a short position until the stock does fall in price, or they can close out the position at the loss. Short selling risk versus reward. A fundamental problem with short selling is the potential for unlimited loss. When they buy a stock, you can never lose more than your invest capital. Thus, your potential gain in theory has no limit. For example, if you purchase a stock at $50, they must you can lose in $50. But if the stock rise, if can go to $100 to $500 or every $1,000, which would give a return on your investment. The dynamic in the exact opposite to a short sale. If you short a stock at $50, the most you could ever make on the transaction is $50, but in the stock goes up to $100. You will have to pay $100 to close out the position. There are no limit on how much money you could lose on a short sale. Should price rise at $100, $1,000, you have to pay $1,000 to close out the $50 investment position. This imbalance helps to explain why short selling is not more popular than it is. Wise investors are aware for this responsibility. Time work against a short sale. There is no time limit on how long you can hold a short position on a stock. The problem, however, is that they are typically purchased using margin at the least part of the position. These margin loans come with interest charge, and you will have to keep paying them for as long as you have position in place. The interest charge functions are something for a negative dividend is that it represents a regular reduction in your quality in the position. If you are paying 5% per year in margin interest and you hold the positions for 5 years, you will lose 25% of your investment just for doing nothing. The stake the deck against you. You won't be able to sit on the short position forever. There most news on the margin front and is both good and bad. If the stock that you will got short rise in price, the mortgage fraud firm can implement margin call with the requirement for additional capital and maintain that requirement minimum investment. If you can't provide additional capital, the broker can close out the position and you will incur a loss. A bad as the second, if it can function as something to a stop loss. We are already discussed potential loss as a short sale are unlimited. Our margin call effectively put a limit on how much loss your position can sustain. A major negative or margin loans is that they enable your leverage as investment position. While the work is the upside, it simply multiple your losses and downside. Brokerage firm typically allow you to margin up to 50% of the value of an investment position. A margin call will usually apply if you're equally in the position drop below a certain percentage factor that can hamper a short sale, no matter how bad a company prospect may be. There are events that could cause a sudden fortune and cause the stock price to rise no matter how much research you do or what expert opinion you obtain. Any one of them could rear its ugly head at any time. Should it happen while you hold a short position in a stock, you could lose your entire investment or even more. Explain of such situation are: the market could rise significantly, pulling up the price of your stock. The company could be a takeover candidate. A company could announce the unexpected good news. A well known investor could take a large position in the stock on the opinion that is undervalued. The news could break about a major position development in the company industry that will cause in stock in to rise in price. Political instability in the certain part at the world might suddenly make your short sale company more attractive. A charge affect the company in the industry in the positive ways. There are just some examples for even that could unfold that could cause the price at the stock or rise despite the fact that extensive research indicate that the company was the perfect candidate for a short sale. The bottom line: investing in short is usually where the risky enough short selling should be left to very experienced investors with large portfolio that can easily observe sudden and unexpected loss. Learn the basic of trading and investing. Looking to learn more about trading and investing, no matter your learning style, there are more than enough with. You will be able to choose course through by real world expected and learn at your own pace. With lifetime access on mobile and desktop, you will also be able to master the basic of day trading, option spread and more. Find about get started today. If you like our video, please subscribe our channel. Thank you so much.